Thursday, November 2nd. Market analysis, Stan Ehrlich. Wow. We apparently do have the October lows intact and pretty much set in stone at this point. But, famous last words, huh? The low that happened on October 27th, on Friday of last week, in oversold conditions, showed promise at best in being a major turning point. But come Monday morning, we made higher highs, substantially higher close, with Tuesday bullish follow through, and yesterday another very strong day. And today we are up almost a few minutes ago, 7 points. I've not seen a higher on the day level by 7 points in the spider in quite a while. That's a really good sign, but there's bad parts of it also. And, overbought too much too quick and gaps. So I think pretty much, and I said so on Monday, that Friday the 27th has been and is now the October lows. And I look for a downside correction, probably starting very soon. There's gaps to close. I'll show you in a moment. And then a rally up to about 4,435 in the December futures contract, E-mini futures, in the next couple of weeks, by the end of November, let's say. Next chart is, come on, the spider, S&P 500, SPY, gapped up, and I'm going to say that a few times in the next few minutes today because lots of indexes did. We gapped up substantially. We're up a lot. As I said a moment ago, 630 at this moment, but the high is around 7 points higher for the day, and that only happened a few minutes ago. The gaps that we have created, and there was a very, very small gap of about 10 ticks between yesterday's low and Tuesday's high. So there's two gaps to close. Granted, the one at the lower levels, and it's down here at 418-ish, and we're trading at 29.05. So 11 points lower from the current quote closes a gap. Now, that's not like it's too much to go down and do the job, and I'm certainly keeping it in mind, but the gap below today's low and yesterday's high is big, blatantly, obviously big. And it does look like a common gap, very likely to get filled. So I'm expecting very soon that could start at the high we just saw in the last hour to go down and get back down to yesterday's high. Now that would be 423.50, and that's not necessarily going to be the exact low tick. It happens very rarely, but something very, very close to that, 10, 20 ticks. And, a little bit lower than that is definitely possible because of that other gap around 418.5. Next chart. But after that, up, up, up and away. And then the Santa Claus rally. And then you got strength in January. So spider, 1 minute chart, just barely made a new high for the day at, give or take, 429.60-ish. Yeah, and we're 40, 50 cents from it. So it was up 7 points. Now, the 1 minute chart doesn't show any signs of stopping, and it may not. I don't have any indication that this rally is running out of steam in any significant way until we start twiddling around 428.30. And if you do that, then you're probably going to slip off even more and maybe start to make new lows for the day, which isn't all that far away, about 3 points, 2.5, something like that. So, and that would start to close the gap. Next chart is the QQQ. Now, the last 3 times, and the third one was last week, Friday, and then Thursday and Friday, we have been oversold and rallied. We were oversold and then finally rallied. We were oversold and then finally rallied. Most of these have been at the bottom of what I thought was a downward slanting wedge or pennant, and it might even be a channel, but I don't know if this is going to be very parallel or not. Not bad, not bad. I've seen worse. I've seen better. So anyway, any pattern that has a downward slant to it in general, head and shoulders, double bottoms, just in general, usually ends up being a bull move. They usually break out to the upside. I fully expect that to happen with the QQQs. No ifs, ands, or buts about it in my mind. So we got a gap again. We should be coming back down very, very soon to 357.60-ish. Yesterday's high, 70-ish, to close the gap. There's also that little tiny gap between Tuesday's high and Wednesday's lows. It's very, very small. You got to look hard to see it, but it's there. And that would be my ultimate downside objective at the moment in the next few days on a correction, and then back up again big time. Next chart, NASDAQ. It's the same as the Qs, but here we have it well into the old pennant or wedge. And I'm expecting the bear trend line across the tops to be challenged, maybe stop it for a few days or a week or something, and then plow through it. Maybe not. It may just simply plow through it, but you got to watch carefully when it gets up to that line. Next chart is the DIA. It gapped up also. So here we have major indexes gapping up. Now, between Tuesday's high and yesterday's low, there is no gap on the DIA, but today, another big one. So I highly expect that the markets are going to be coming back down to approximately yesterday's highs on the average and the indexes. Next chart. The Russell 2000, how about that? We talked about the bullish engulfing and it didn't work. And that was last week, Thursday, I believe. Friday, it got down to the lowest lows in 3 years by a squeak. And it didn't stay there. All of a sudden, it bounced back like a ping pong ball off of granite. And oversold disappeared, rally started, followed through yesterday, and we have a big gap up today, just like the other indexes. This I would consider to be a bullish breakaway gap off of oversold condition at historically huge, profoundly important support. I'll show you again. That's 3 years ago, almost to the exact week. And these are a whole mess of lows starting in June of 22, again and again, and now again. And there's evidence that this support and resistance area was legitimate all the way back down, all the way back to January of 2018. Lots of highs and lows in that little zone. So the Russell still started a new bull market move with a giant support area. The major breakout, of course, is going to be way up here, a little over 200. Ain't close at all, but give it a few months. Next. And I'm going to stop this at the moment and go to the October low chart that I have shown you many times before, last Friday, October 27th low. And it shows you that sometimes the October lows are not in the middle of the month, like you might by default expect, but that's not the case. Here's October 29th in 2018, October 3rd, 2019, October 30th, 2020, on October 4th, early in the month in 2021, and smack dab in the middle of October last year, October 13th of 2022, we did have that incredible bullish engulfing ER buy signal at the bottom of the bear market in the beginning of this bull market. Let's put things into perspective here. I'm spending a lot of time on it today because this is very profound. If I'm right, we got weeks and weeks on the upside. I'm not discounting the Santa Claus rally. Now, that usually involves some sort of a dip down toward Christmas, and I'll get into great detail, down to the minute, actually, and to the day, as to when you should be considering to buy the Santa Claus rally, literally to the minute and date, like I tried to do here on the cycle low, October low, and it is a seasonal cycle this year. And I missed by time, off by a week and a half, but my prices weren't so bad. My expectation was 407.5 down to 406, and we bottomed down on Friday of last week at 409.21. So kind of close. At least it got in the circle, which is what I was hoping for at a minimum. And zoom, I didn't expect it to come out of it this quick, this good, this fast. All right, futures. A lot of correlation going on here. The E-mini, from a different perspective, is moving out of a major support area again. We did it in early October, and here we are starting it in early November or late October for the lowest low, October 27th. That date is going to go down for a long time as being very important last Friday. So we're going up a little too fast, too quick, don't you think? We're now at, in the E-mini, we're at 4,000, what's the current quote? 4,320-ish. And the bottom was 4,120. Hey, that's quite a move. 200 points in 4 days. A little much too fast. So I'm expecting it to top out. Plus, you got on those other indexes the gaps to close. NASDAQ, same kind of commentary. Not too much different to say here. Bonds. Oh, yeah. Bottom, we picked to the day with a ER buy signal, October 23rd. I've had this chart every day, well, for a year. It's a continuation contract, so you have to be using like Christmas bonds. Anyway, it's worked out fabulously at this point. I'll put the strategy in here probably for tomorrow, and it's just working. What can I say? 2 days after the bullish engulfing, which always contains an ER1 new long on the day of the green, but 2 days later we got long a little bit cheaper at the green dots and closed with a small loss on our first day, a profit every day after that. And even during the day, hardly a little bit of a loss for a couple, 3 days right there. And then it took off like a bat out of you-know-where and just rallied like heck. You know what else did? 10-year notes, of course. Now, they're looking a little weak at the moment, coming back into the lower half of the range of the day near the opening. I wonder if we aren't making a little bit of a high here short term, like I've been alluding to in the stock market indexes at the same time. Wouldn't surprise me. But the point that's more important, we got a shelf of support here at 106.5. That probably is going to hold the dip here, and that's the 10-year notes. And then new highs after that, whatever they may be, today's high maybe. A little tiny bit of resistance at 108.18-ish, 17. But the major problem is going to be encountered at 10, let's call it 111. We'll talk about it when we get there. Crude. Support's holding. We're rallying pretty good today, and we never did break down completely, but we got to the bottom of support, and now we're popping back up a little bit. Not oversold either. So I'm a little skeptical about this holding. I'm not going to say too much at the moment, except for what I just said. But I'm trying to figure out if this thing is really topping out for sure or not. Crude. That was crude. Natural gas had a great trade. ER3 short got out, and we're still trading approximately the same levels from where we got out a week ago. We've been higher, we've been lower, but is this really topping out? I think it has a very good chance of coming back to 3.2, which is very, very good support area. But look at what's happened here for, well, since May at least, and I'll go backward. Oh, yeah. Okay. So the lowest low was in June, and the lows have been relatively steady and lately climbing a little bit. You could say that the highs have been relatively steady and then starting to climb a little bit. So the trend is starting to ever so slowly bend upwards. If you got a long-term, like the Dow Theorist 200-day moving average they use on the stock market sometimes, and a long-term investor moving average. And recently it was important to a degree. I'm not a big moving average fan because they are late by design, but they are a great long-term crutch, so to speak. Anyway, this looks like it's ever so slowly trying to bottom out. Next chart is the heating oil. Again, this looks like it could be building some sort of a top. And here we go. We are starting to rally a little bit. And I'm talking last week or two about a last shoulder low on a head and shoulder top, maybe. And I'm pretty premature here. This looks to me like the potential first shoulder, maybe August 10th. What about that rally on August 25th, the second shoulder? They are sloping upward a little bit, typical as heck. They could be slight, relatively parallel, same levels. So here is the, oops, that neckline should not be off that low. In fact, that should be off that low after the first shoulder, the lowest low. Okay, sorry about that. But this one is pinpointing it just right, and I'll put it across that low right there so far and extend to the right. And that way we see what should be the neckline. Now, if we stop rallying in the next few days at around 3.115, 3.15 I meant, which is approximately where the second shoulder was also, but in this little, I could draw a circle like I did for the October lows. And it would be in the next week or so, and it would be just very slightly higher. And it gets there and start to turn down, I'll start screaming bloody murder, last shoulder high, downside objectives, et cetera, et cetera. Let's see what happens. We sold the high 2 days ago in gold, almost. It's the second highest high on the rally. And we are short. Yesterday, we got short near the high of the day yesterday for an ER3 with the red dots, closed with a profit. Today, it's a little bit less profitable, but the rally has been nil so far, and we have a doji. So I'm looking for new lows and a new low close ASAP. Now, I'm not going to be surprised if it goes all the way down to 1,850 again. Next chart, silver. We had a sell signal a couple of days ago that did not work. So we had a small loss on that almost immediately the next day. But as I mentioned before, these things can cluster 2 or 3 in a month, and maybe we're going to get that. Otherwise, it's an indication it's trying to top out, but we didn't get the high like we almost did right there, like we did exactly right there, like we did exactly right there, exactly right there. We got the low exactly right there. Next chart. Platinum. We got the low exactly right there and the high exactly right there. And we almost got the low right there. So why didn't we get a sell signal up here? I don't know. You never can make the market do what you want it to do. You always have to move with it. So overbought conditions, that's about the best I got to go off of. We never got up to resistance. We never got more than just a little bit oversold. I'm not convinced that this rally is completely over. We may end up holding about today's low already, or a little bit lower, possibly. Yeah, and then turn back up again soon. So nothing exciting here. Not like orange juice. Holy moly, do I have something to show you in orange juice in a minute. I mean, wow. Okay, high-grade copper. Sideways, a little stronger, a little bit of a rally today, nothing special. The big significant feature here is the support area. It was broken quite a bit, but there was never trending lower after that. And now we flip-flop completely back up into resistance. The trend is down ever since when? The beginning of the year. We've seen lower highs and lower highs and lower highs. Great sell signal on that one. And we've seen the lower lows and finally lower lows again in this previous month. So I'm looking for reasons to go short of resistance, I suppose, and I have to be a little ambiguous at the moment. Next chart. Soybeans, we got the bottom of the market on that break right there, October 12th. The market is trying to make some bullish progress, but really not doing a great job of it. Excuse me. And we have a new high close likely for about 3 days, 4, 5, 6, 7 days, but not very impressive. Wait until we start rallying above 1341. That's going to start to make it pop. Then it's going to probably jump another, I don't know, 1,400, 1,400. Yeah. So I am friendly. I can't really say super bullish or something like that. I know this is a very, very big long-term pattern that started, gosh, two years ago almost. And it didn't conform that move by itself. I hate that when that happens. I got to move that up to there. Okay, so all I've got is a gigantic sideways trading range with a failed bullish breakout, back to support, and trying to work its way higher. So, yeah, modestly friendly. But soybean oil, we're done. It's cooked. It's finished. This head and shoulder top has worked outstandingly accurately. It could go into a textbook example of how they're supposed to develop. You got your shoulder on July 5th and it was overbought. You got a head that turns out to be a double top in itself, and that's not unusual that the top of markets are patterns This happens to be a head and shoulder with a double top involved, and it's the head. So the second high, we got a sell signal, yay, on October 21st. And we took a short position, and this trade has been developing for weeks, and you see it every day for the last few weeks. What can I say? We have reached my minimum downside objective at this point, which was 50. Today's low, well, actually, lowest low yesterday after I finished my YouTube was 49.78, below 50. And now guess what? Today we're oversold. Yep. And it made a lower low with a higher quote. At the moment, we're trying to turn around at an objective, which is sort of support as well. Yeah, that's support area. That's that little red zone I'm extending to the right is not just because it's at 50. It's because it was support. Bounced off of it there, trouble there, bounced off of it there, bounced. So 2 reasons. Objective is 3. Objective has been met, oversold condition, and a support area next chart. Soybean oil did a great job. Raise your right hand up in the air, twist your wrist, and say goodbye to that head and shoulder pattern. Soybean meal rallied into resistance, top of the range, topped out, and it's come back down to the bottom and it's going sideways. A doji at the moment. But guess what we've got today? Hello. An outside down day bearish ER sell signal, period. We are short from almost exactly the current tick. We'll call it 424. 423.90, 80 now. And to be more exact, 423.90. That's the tick that we're short from, but the tick below yesterday's low. We want to go short at the red dot, 428.30 in the next few days. Let's see if we can do it or not. Otherwise, ER1 is short. ER3 may go short in the next few days. You don't want to do it today. You're supposed to enter your order for tomorrow in the next few days. We'll see what happens. But this is a brand new sell signal in a resistance area after being overbought. Kind of like my favorite combination of stuff. There's a few others I like a little bit more, but this is very high on the list. Here we go. Tierra del Fuego, heading south. Soybean meal, corn, new low. Almost a new low completely since July of what? 22. Yep. Way over a year ago. And if we make that new low, which I think is coming up next week, maybe next couple, today or tomorrow, but very soon, is going to go by the wayside, just like, guess what? Wheat. Back in August, support held, rallied, broke support, back up to resistance, used to be support, and a series of new lows after. Didn't quite make it this time. So it's been going sideways for about a month, but I expect new lows very soon. Next chart is live cattle. We got a buy signal, and it's working. The last signal was a sell signal, and it worked great. The last signal before that was a sell signal, and it worked very nicely a week and a half or so. If you ride them, you realize that the ER1 and ER3 represent scalping trades and position trades. The scalping trade is not much to talk about when I only have a 1 day, so I usually don't. But the position trade, I can show you how it's developing over time. So I tend to concentrate more on the position trades. We had a buy signal, and we are now long ER3 at the green dot at 183.296-ish. Actually, 183.290. And we were long yesterday, and it closed at a profit. Today, it's just simply going up more. We have a new high, likely a new high close. It now has closed an old gap. It tried to close a couple of days ago and almost did the job. So now that job is done, and that gap is right there. But if it was going to be more bearish, it should have, would have, could have stopped, and it still could, when it closed the gap and turned back down. But this does not look like it's trying to stop. I think it's going to stay here and maybe even gain more ground and keep on going up some more. I'm not going to be surprised to see 188 and maybe a little higher very soon. Next chart. Oh, no, I apologize. We got the low again. Almost. Missed by a very small amount. This trade is in progress, and oh my God, live hogs. Yep, we're going to stretch this line to where it should be at the moment. That's the trade. To be more exact, it's an ER1, and this is actually the entry prices and dates. Bought it. Next day, ER3 also bought it. No, I lied. That's not true. We never got down to the green dots. Sorry about that. ER1's long from here. Profit or break even on the first day. Profit, 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 profit. One bad down day, and boy, that has been corrected today. This is a new high and a new high close, finally getting up in my first objective area. And we are very close to being overbought. So I think we're close to bumping against the top of the resistance, maybe 73.50. But this could easily get all the way up to 78. Next chart. OJ, honest to God, people, I screamed bloody murder on October 31st. I mean, I couldn't have been more adamant about this. I even said I didn't think I was going to get filled on ER3s, and we didn't. We probably won't. We have to rally all the way back up there, and it's not going to happen. This thing is just simply collapsing. In fact, we gapped below a major bull trend line also this morning, honest to God. This is textbook stuff. Now, yeah, gaps are almost always closed. I keep telling you that. They're like a black hole in space, which tends to suck the price action back into it. So I'm not going to be surprised if we come back up to about 373.5 in the next few days to close the gap, and at the time, test the neckline underneath the neckline and then turn down again. I don't know how bearish this can get, but this is big. Let's call it 327 for my first downside objective. A whopper. This is an 11 out of a 10. Next. Cocoa doesn't seem to want to stop. Broken a new high ground, got overbought, came back down to the previous highs, and they happen to be back in September 15th, bounced right off of it yesterday, and now we're almost a new high ground again and overbought again. This could end up fiddling around a little bit here and then progressing north. I got nothing at the moment that tells me it's a major top. It just could fiddle a little and then progress more or simply go up more, period. And next one is our coffee. I told you a couple of days ago that I was getting a little iffy despite a very big, strong rally. It threw me off somewhat. And then, boom, we came right back down yesterday. But look at this. We're coming right back up again today. Something's going on in coffee that's kind of weird. This is obviously acting a little bit unusual, to say the least. I can, and I will, say that we so far have sold the top. We sold a high day, and there was a great 2 or 3 day short sale involved. We also got the low back in here for a modest rally for a while. That sell signal was stupendous. It immediately just crashed for a couple of weeks. Anyway, next chart, sugar. I'm, for obvious reasons, starting to be a little bit more friendly, a little more quickly. This is a bullish engulfing at the moment. Now, granted, we are barely higher by about 4 ticks. But if we close higher, point blank, 1 tick or more, it will be an outside up day, bullish engulfing, and that should push it into new high ground. I like what I see. I'm bullish, but I'm not super, optimistic or aggressive about this, put it that way. Unless, of course, it rallies real quickly before the close. The key here is closing a new high ground, and that should shove the market up a lot pretty quickly. That'll be an upside breakout. Next chart is cotton the rag, oversold for 2 days in a row now. Should rally. It is starting to. We're a little bit higher for the day, but I think the rally's not going to go too far. Maybe back up to the red zone again. Why not? I mean, the damn thing's been going sideways here for quite a while, and for a year. Every time it's got into this red zone, it has stopped. Way back there, once, twice, almost, 3, 4, 5, 6, 7. Wow. So that's not out of the question. Next chart is the E-mini, which is, oh my gosh, by golly, high and last. We are now up 7 points again, 6.98. This tick on the S&P Spider SPY at the high of the day. Let's take a quick peek here. right up there on the E-mini. Hang on. Let me go to, okay, let me go to the chart I want, which I am getting frustrated. Oh, I know what happened. Yeah, no problem. Da-da-da-da. Yep, that one. And okay. Yeah. Oh, by the way, on the opening, we in the Russell rallied so much so fast with that big gap, turned red on the 1 minute chart on the price action, which is our scalping new short sell signal concept. We haven't turned it into a strategy yet, but that one was a whopper. It happens, once or twice a week, and all over the place. A lot of different stocks. It's simply an extreme overbought condition on a short-term basis, and it did produce a pretty darn good rally break immediately. It was exactly what we expected. Now, we do also turn green, and that's not the reason why back there. That's because that was a bullish engulfing ER buy signal that didn't work, and there's our losing trade. So I'm showing you the losing trade, and we're out right away. And we were in on October 26th and out the next morning, pretty much. Okay, I babbled on too much here. You guys have a great day. Come back tomorrow. We got more goody stuff. I may start talking about some cycles.